presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, folks. This is Steve Rhodes coming to you live from the shores of, well, a very cloudy Delray Beach, Florida, filling in for Tommy O'Brien for the Tom O'Brien Show. Great to be with you on this marvelous Monday. I'd love to field your questions, and so the way to do that would be to send me an email. If you send it to steve@tfnn.com, send it off early, and in that subject heading, please put radio show question. That way it makes it easier for me to spot your email versus the junk email that comes across my phone so significantly. So if you do that, then we can take a look at what you want to look at. In short of that, we've got plenty to review inside the indices. Right now, you've got all the U.S. indices trading to the upside. Dow's up by 89 points, S&P by 31, NASDAQ 100, 140, Russell's up 13, Trendy's up 29, Semi's up 108, SOX is up, or the NASDAQ Composite up 155, New York Stock Exchange 67, the XAU Gold, the whole metals complex having a heck of a rally. Today, you're up about 3% for the XAU. The VIX is still below its 50-day exponential moving average, even though it is trading up 46 pennies, trading out at 15.91. Gold is up $77. Silver's up $1.26 out there. And we're going to spend a little bit of time taking a look at the gold complex. There was a question that was sent in early this morning during the 11 a.m. show, the Trader's Edge, and what I really wanted to do was be able to put together some information that I think will be helpful to each of you. So let's do this here. Let's actually get into that. Let's do that. Give me a moment here. So I had to go back and you'll see I had to go back and get some historical charts so we can have a historical frame of reference out here. And we're going to start by taking a look at the yearly chart for gold. So this is where we're at right now. This goes back as far as the data that I have, unfortunately, which gets us back to 1975. Now, the one thing that I want you to take a look at, if you haven't heard my show, the Trader's Edge show, there's a set of tools that I use to help us identify and time the market. One of those tools is the TD9 count pattern, a very easy pattern to learn. I teach that. You can become a subscriber of Mastering Probability. You can do that for 30 days or less out there. It costs you nothing, but you will gain a huge education. What you'll see is last year was bar number 8. This year is bar number 9. TD9 count tops form on bars 8 and 9 to the bar following bar number 9. If we take a look at Goldilocks, we can see that when it actually last topped, which was back in 2011, it was the bar following bar number 9. In fact, that high held for 15 years out there. This is an annual chart that we're taking a look at. So what this tells me is we're either going to get a top this year, or more likely next year, just following that same pattern from back in 2011. So that's an important perspective for you to take a look at. As far as yearly rallies, this looks like to be the largest rally. The second largest that we have out here would take us back, yearly rally would take us back to 1991. So likely not to top out until next year. This is a gold's top that formed the week of January 25th. And by the way, when an instrument is going to top or bottom, we will get a signal out there. And all you have to really do, which I'm doing with you this afternoon, is taking you back historically. And here what we do, if we take a look at the last significant top, I would say the last significant top would take us back into the 1980 timeframe, was that week of January 25th. And what you'll see, remember we looked at the daily chart. Remember that 2011 top was the bar following bar number 9. On this weekly time frame, it also was the bar following bar number 9. That set up that significant top out there. So topping signals will occur. Doesn't mean that it'll occur on the daily or the weekly and the monthly all at the same time. It can, but what we will do is, and as you know, if you watch my show, we always are taking a look at daily, weekly, and monthly to give us a perspective of what takes place. Now, when we form TD9 count tops, you'll see a couple blue diagonal arrows out there. What typically unfolds is price will pull back to this green or red squiggly line. That's referred to as the oscillator and change line. Again, it's another tool that I teach and share with you. It's very important to understand that because that is a key level of support. For example, even the weekly TD9 count top, look at that big pullback from about $880 or so, all the way to where? All the way back to that green oscillator and change line. So that's 1980 top. If we take a look at January 22nd, 1980, what we're going to see here on the daily time frame is that it formed an island top. That is a set of Japanese or candlesticks out there. That is the most bearish signal of all. So we had a weekly TD9 count top, and then we had a daily island top out there. When gold does top, we will see these type of topping patterns. May not be a TD9 count, could be a Rhodes momentum indicator signal. Again, another tool that I share. If we take a look at gold today, gold is going to negate a daily TD9 count top. That formed 3 trading sessions ago. So that tells us when you negate a pattern like that and you do it relatively quick, tells you about a strong upward momentum move. Well, if we take a look at the weekly time frame chart out here for December, you can see there's no topping signal. There is a Rhodes momentum indicator signal present. That's a black diagonal line, but that requires a bearish reversal candle to confirm that top. For the monthly time frame, what I want to do is I want to take a look at the continuous contract. And the reason I want to do that is because I need more data than what I can grab just off of the December monthly contract. Here, this shows that we're in wave number 7, that's letter G. When we actually add all the historical data, we can see that that is not the case. In fact, what we did was we negated a wave number 7 signal. So from a monthly standpoint, we do not have a topping signal for gold for its monthly time frame. We do not have a topping signal for its weekly time frame. And we are negating the daily signal. You should expect and anticipate that gold will continue to rally. That doesn't mean that it can't pull back for a couple days. 2 to 4 day pullbacks are just simply normal, kind of referred to as knee-jerk reaction lows out there. The best bull markets occur when the instrument that we're taking a look at is trading higher in all major currencies. This chart here in the upper left-hand corner shows you gold trading in dollars, but next to it is gold in euros, then yen, Great British pound, the Canadian loonie, the Swedish krona, Swiss francs, the Chinese yuan, and even the Russian ruble. And guess what? We're at new all-time highs today in all of those currencies. What's that tell us? We have got a worldwide global rally. Don't expect it to fail anytime soon. If we take a gold in all the Middle Eastern currencies out here, you got the Kuwaiti dinar, the Egyptian pound, the Jordanian dinar, the Syrian rial, the Syrian pound, the Saudi rial, that is, the Syrian pound, the Iranian rial, the Iraqi dinar, and the Israel shekel out there. That's the only one, the Israeli shekel, that is not at a new all-time high. Now, maybe that sounds like good news. What it really tells us, I believe, is that we are in for war, more war than what currently is going on over in the Middle East. Now, this chart here, some people might conclude, hey, you know, Stevie, gold's really moving higher because the dollar's moving lower. The bottom portion of the screen is the U.S. dollar. When did it bottom? Back in 2008. Has been trading basically sideways to higher ever since. So too for Goldilocks. So don't think that the reason that gold is moving higher is because the commercials on television tell you that the dollar is trash. The dollar is not trash. The gold is not trash. These charts are not trash out there. When we come back to this break, I'll finish this. Then we'll go take a look at the indices and a couple of requests that have come in. Steve Rhodes filling in for Tommy O'Brien. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back to the Tom O'Brien Show, folks. My name is Steve Rhodes. I'm filling in for Tom. I host the show, The Trader's Edge, seen here daily at 11 a.m. Now, this chart that we had up on our screen before we were just going to the break, top portion is gold, continuous contract. Bottom portion is the U.S. dollar index, the same thing, continuous contract. Now, you'll see the green horizontal levels. Now, we're using a line chart, so we're just looking at that daily close. This happens to be a monthly chart. And, what gold is in right now is what's referred to as a phase transition. In a phase transition, you usually have a large consolidation. Well, you can see here we had a consolidation that takes us back into the 2008, 2009 timeframe. Didn't really break until when is that? About in the middle of 2022 out there. And then ever since then, we have just simply been cruising higher. Again, we've seen other phase transitions out there. Everything will generate some type of topping pattern. Now, what we just reviewed during that first segment, if you didn't hear that and you're just tuning in now, go ahead and listen back to that. You will see that gold forms tops even during phase transition periods. We do not have any kind of topping pattern as we speak today. If we take a look at where we go. Here we take a look at gold. So we've definitely, in my opinion, we have discounted the idea that gold's moving higher because the dollar's moving lower. Hogwash, BS, absolutely. When we take a look at the charts, there's just no way that's humanly possible. What really moves gold is geopolitical uncertainty. And my goodness, do we have a ton of it. But the interesting thing here, and this happens to be a weekly chart for gold, and what I've put out here, the very first data point is the Russia annexation of Crimea. What did that do to gold? Well, basically did nothing. Gold simply trades sideways out there. So we know that wasn't the impetus to go ahead and push gold higher. Then we had the period of transitory inflation. We know it wasn't transitory, right? It was real inflation. But if you take a look at that green box out there, the entire time period that was going on, what did gold do? Not much. Didn't even take out a prior swing point high out there back in the 2020 time frame. When did gold really take off? Well, and this typically takes us back into the 1978, 79, 80 time frame as well, when we had all the Middle Eastern issues that were out there. Primarily, that was the Iranian hostage conflict. But here we take a look at the Hamas attack at that Israeli music festival on October 7, 2023. Gold has basically not looked back. Even the Even when Russia invaded Ukraine out there, that's this other data point right after the Powell transition or transitory information. We actually saw even when Russia invaded Ukraine, gold actually moved lower out there. So I really think it's all about the Mideast. We took a look at those Middle Eastern charts. We see that gold there is priced at new all-time highs. I think that's indicating to you and I that there's still some major political uncertainty and war that's going on over there. If we take a look at where is the next likely price target. So we come back to Stevie's charts here. This is a monthly time frame chart. It shows the horizontal trading ranges. Those are the red horizontal lines out there. The numbers on them represent price target levels, either areas of support or areas of resistance. For example, we stood at the 33.91.90 level for, again, this is a monthly time frame chart. We tried taking that out 1, 2, 3, 4 months in a row. The fifth month, which was 2 months ago, last month actually, we took that out, and now what price is doing is heading up towards the next horizontal trading range level. That's at the 39.12 area. More likely than not, it's going to poke its head above that and hit that next diagonal rising price channel. So and I am not saying that's where gold is going to top. I'm just giving you another price objective out there using these horizontal and diagonal price channels out there. So I hope that really answered the question with regard to gold. Again, we looked at those historical charts out there. There will be a topping pattern that forms. So now let's move on to what's going on inside the indices. Of these charts here, these are the daily cash indices out here. The one that was most important, at least in my eyes, was the semiconductor index. Why is that? Let me just simply expand out the chart. What you're going to see is that on Thursday of last week, what the semiconductor index did was generated a TD9 count top. Remember, we looked at gold on a yearly basis. It was a bar following bar number 9. That is not unusual. In this case here, that was a TD9 count top that was established back on September 18th. The high of that pattern is 63.1159. Now, granted, there's 38 minutes left in the trading session. Price could pull back and close below that. If it doesn't, we'll retain that pattern. But a close above 63.1159 at 4 p.m. negates that signal, tells about a strong upward momentum move. Now, as we take a look at all of the daily equity or all the daily cash indices out there, we do not have a topping signal in the S&P 500, nor do we in the NDX, nor do we in the Russell 2000. The semis we've already covered. The transports are the ones that really are struggling out here, but not the NASDAQ Composite, nor the New York Stock Exchange. The Dow Transports, you can see that price has been tapped out, if you will, at its green oscillator and change line. From a daily standpoint, price has been trying to poke its head, close above it since September 2nd. So for the entire month of September, price has been below that green oscillator and change line. What does that tell us? That tells us if we see a close above it, 15,672.72, 2 consecutive closes, then the trend has changed. Now, what the trend would then do is target its swing point, a high out here. That one would take us back to the high from August 22nd, and that'd be at the 162.26 level. NASDAQ Composite, again, no top. So on a daily basis, as we speak right now, other than the semiconductor index, which likely is going to have a TD9 count top that fails, no topping signals out there. Price should continue to move higher. Now, if it pulls back, it can do that again for 2 sessions. If you take a look at the bottom panel, for example, of this chart, I'll just simply pop open the S&P 500 so you can get how this works out here. These are kind of the dance steps, the tempo of the market. Consecutive moves higher, consecutive moves lower. Other than this anomaly out here back on August 21st, where we saw 5 consecutive days to the downside, we typically see 2, 3, or 4 bar moves to the downside out there. The last one was a 2-bar move to the downside. Today's going to be 3 moves to the upside. Nothing goes straight up, nothing goes straight down, but important for you to understand the tempo of the market, and that's why I've added that to the bottom of many of the charts that we take a look at. Where do we want to go from here? Let's go from here to my black background charts. I had mentioned when we take a look at gold, best bull markets are the ones that are trading at new all-time highs in all major currencies out there. Well, here's the S&P 500. The S&P 500, no new highs as we speak today in terms of euro, but yes in terms of Great British Pound, yes in terms of the Japanese yen, yes in terms of the Canadian loonie, not so much with regard to the Swiss franc out there. We're new all-time highs in the Chinese yuan. We're new all-time all-time highs in Australian dollars out there, not so much in rubles, but strong bull market even in the S&P 500. The issue is, quite frankly, with regard to the equity markets, is this set of charts out here. And this set of charts shows us the Dow. This shows us the Dow priced in all those major currencies as well. Other than the Chinese yuan and the Canadian loonie, we are not even near new all-time highs in most of those other currencies. Yes, we're moving higher, but we're not at new all-time highs. It just says it's a reason to pause, not necessarily a reason to sell out here, but just a reason to be careful out there. And why the Dow? The reason why it's to be careful about the Dow is simply because that is where really large caps store their money. If this chart here is a yearly chart for all your primary indices across the globe and here in the U.S. The top portion, you got the Dow. Those yellow lines that you're looking at on this chart is last year's high. When you trade above last year's high, that is a bullish signal. Well, look at this set of charts here. It doesn't matter whether it's the Shanghai, the Hang Seng, the Nikkei, the semiconductors, the FTSE, the DAX out there. We're trading above new all-time highs. So I can't say to you that global capital is just concentrating in the U.S. That is not the case when we take a look at these charts out here. We got global rallies going on across the planet. We come back from this break. Let's take a look at AGEN for Dan, LAES for Nitram, BB for Nitram as well, Steve at TFNN.com if you'd like me to look at an instrument for you as well.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Steve Rhodes filling in for Tommy O'Brien. This is the Tom O'Brien Show, 3:30 in the afternoon on Monday, September the 22nd. We're taking a look at the Dow Jones seasonal trend. This is a set of charts provided to me by the good folks over at SeasonX. If you're looking for seasonal chart patterns, folks, they've got it all going. This is 128 years worth of data. What we know here, if you take a look at the bottom right, September is usually a troublesome month out there. Well, we're certainly not inside this cycle at this stage here. September is going to come to an end next Tuesday, so unless there's going to be some hellacious move to the downside, it is most certainly not following this trend. Typically in October, what we see are bottoms out there. You can see the first bottom on average occurs right at the beginning of October, the next one right around the end of October, and that really begins our Santa Claus rally out there. Typically, if we take a look at this, is a set of this is the Dow chart out here, a monthly Dow chart. I'm taking it back to the most famous of October surprises, and that would be the October 1987 crash out there. But all these yellow lines, you can see typically what takes place in October or shortly thereafter is a bottom with the market rallying. We don't have that many surprises in October to the downside. Now, we most certainly did back here, back in October of 2007. So, but we will get a topping pattern if that were to unfold. The next October pattern that we had out here takes us back to 2018. So I don't think that is likely what we're going to go ahead and take a look at out there. So let's move off of these charts and get to the requests that have come in. The first one coming in from Dan, who wants to take a look at ticker symbol AGEN. We take a look at AGN. Here's what we know. And I'm going to start on the monthly time frame. In the monthly time frame, back in April of 2025, this went ahead and completed a TD9 count bottom pattern. Now what we have is price getting back inside its profile. The bottom of that profile, which is now support, is $4.22. We can see that price ever since really getting back into the profile back in June of 2025. We've explored the bottom and we've explored the top, 766. Those are the numbers to be paying attention to for a longer term view. On a weekly time frame, back on the trading week of April the 11th, what AGN did was formed a Rhodes momentum indicator bottom pattern. We then got a TD9 count top. That led to really just a very short-term pullback, and that pattern was negated back in July 11th, the week of July 11th out there. Right now, on a weekly basis, price is just simply trading with inside its profile. It has support at 424, resistance at 695, Dan. On a daily time frame, today we've explored both support, which is the buy zone. That's between 423 and 434. And now we are exploring resistance, 455. What I would say is that if price closes above 455 today and 455 tomorrow, we should get up to 501. 501 is going to be the center of that weekly profile. If we get above 501, we'll go target. If we can move into the September 10 swing point with more than 814,000 shares, price will go ahead and explore the 520 level out there. So that's what I see at this moment in time. We take a look at AGEN. Dan, I hope that helps you out. Thanks so much for your request. Nitram inside the Tiger's Den wants to take a look at ticker symbol LAES. Not the potato chip, but as we take a look at lays out here, it's going to form. It's going to complete a TD9 count topping pattern today, Nitram. Now, two things are likely to happen. The first thing, and the most likely, is that price will begin to pull back. The pullback target is going to be its oscillator and change line. That is currently at $3.40. We're trading at $4.14. So that's one price target. Another price target might only equate to a 2-day pullback. Today could be day number 1. Tomorrow could be day number 2 out there. So that's what we'll take a close look at. The other potential pattern is that this goes on to negate its TD9 count top. In order to do that, we need to see it close about $4.80. If it does that anytime soon, let's say this week, boy, that tells you about a very strong upward momentum move. On a weekly time frame, price closed right at its breakdown level at 428 out there. The actual close last week was 429, so it closed above it by 1 penny. 1 penny doesn't really, blow my skirt up. I don't know if it blows your skirt up. So it really wasn't taken out, and now we're back below that level. But if we were to close about 428 this week, that would be a positive outcome as well. That would then suggest to us, Nitram, the price would make a run for monthly resistance, $4.99. So that's what we see when we take a LAES. Hope that helps you out. You also had a request to take a look at BB. So let's go take a look at BB, see what this is doing out here. Right now, trading out at $4.38. Now, I don't see a daily topping pattern. Price above profile resistance. It's above its green oscillator and change line. Those are bullish conditions out there. Bar number 7 from a daily standpoint. Price wants to make a run for its TD9 count breakdown resistance level. And that's at $4.58. That is supported by the weekly chart. The weekly chart is now trading above profile resistance at 424. And as long as price remains above 424, 458 is that target. If price can close above 458, then what price will do will go after its weekly TD9 count topping pattern. Now, we can draw in here, and what you should do, Nitram, as well, is draw in a trend line. So if we take a look at the high out here, that takes us back on a weekly basis back into the February 21st time frame, and then you got that TD9 count top. That is a likely price target. Now, I would guess that's around the 460 type area out there on a weekly time frame. So we've got 458 on the daily TD9 count breakdown resistance, about 460 or so on the weekly time frame chart. That is where price is headed to, and that is also supported by the monthly chart. Price is trading above profile resistance at 343. So BB is likely to rally. 458 is likely where it's to head to. Today is going to be the 9th consecutive day for moves higher. Boy, this is strong like bull on a weekly basis. This could be week number 7 to the upside. But I do believe that BB is going to be running into resistance here over the course of the next couple. It should do that this week is the likely outcome there, Nitram. So I hope that helps you out. Let's take a look at Rail for Greg. Give me a moment here. We'll get over to its charts. Rail, R-A-I-L, is trading out at $9.94. Now, on a daily time frame, Greg, you're looking for upside action. Today is bar number 8. This says that you could or should get a top between today and Wednesday. The weekly chart says it may be today. The reason the weekly chart says that is because price has found resistance at the bottom of its profile, and that's at the mark of 1007. Now, if price could close above 1007, that could get us up to the 1088 level. Again, you're looking for upside action. I would say caution, be careful, because of the daily TD9 count pattern that is going to form either today or over the course of the next couple of days out there. Watch that 1007 level. If that continues to act as resistance out here, we're likely get a retracement. Now, that retracement on Rail could take you back to support, and that support level is going to be anywhere between 866 and 895 out there. 928 might be another support level. That's coming from the weekly oscillator unchanged line. On a monthly basis, just a consolidation with inside its profile. So everything in Rail, Greg, is being driven by the daily time frame chart. We come back to this break. Greg wants to take a look at CX. We'll do that as well. I think there's a couple more requests inside the Tiger's Den. Of course, you can send me requests as well. Steve at TFNN.com. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Steve Rhodes filling in for Tommy O'Brien. Right now we're taking a look at ticker symbol CX. This is for Greg out here. So Greg, on a daily time frame, what CX did was about 4 days ago generated a Rhodes momentum indicator top. That was confirmed with that Three River Evening Star candle formation. Then on Friday, price got back inside its profile. It closed below the level where a counter trend move would come to an end, $9.13. Now, what does that tell us? Well, the first thing it tells us is that on a move lower, you could expect or anticipate that price would go target the next time the 893 to 857 level. Now, it was just a 2-bar retracement to the downside that formed out here back on the trading session of this can't be right. Oh, it's not right. The bottom panel on this has got the GDX. So my apology there. So we're going to we'll forget the bottom panel. But right now, what price is doing, it's trading above the top of its profile. And that's at $9.20. So you're going to want to watch that close out there. If price closes above $9.20, we've had 1, 2, 3 closes in a row to the downside, so wouldn't be surprised to see a couple bar move to the upside. The weekly time frame has a TD9 count top, so you've got a daily Rhodes momentum indicator top, and you have a weekly TD9 count top. On the monthly time frame, price is attempting to close above a swing point that formed back in April of 2024. 161 million shares traded that month. This month so far, we are at 147 million shares. So we're testing that area. I can't tell if that's with volume or without volume. We also had another swing that had 201 million shares. That was back in June of 2021. I would say for the most part, we're not going to take that out. So CX has basically got a triple top, if you will, on the monthly time frame, a TD9 count top on the weekly time frame, a Rhodes momentum indicator top on the daily time frame. Price targets to the downside for the weekly would get us down to 891 and then 830 to 874. On a monthly time frame, a price target to the downside would be 754. That doesn't come into effect until you take out the support levels on the weekly time frame. So to summarize out here, you've got daily support at 893. If you get below that, we're likely headed to the 874 level. If you get below that, we're likely headed to 830, and below that 754-ish, so to speak, out there. That's what I see, Greg, when we take a look at CX. You're asking about upside potential. Right now, I think what you've got to deal with is the downside potential for CX. Duncan Steve inside our Tigers Den wants to be Romeo and Juliet, to be or not to be. BE being the ticker symbol out here. And BE right now is trading out at $85.89. Last week, what it did was it went ahead and completed a weekly TD9 count top. What are we doing right now? We're trading off last week's high. Last week's high is 85.40. It doesn't matter what we're doing on a Monday. It matters where we close on a Friday. And if we do close above last week's high, again, that was 85.40. If we close above 85.40 on Friday, it's going to negate that signal. And Steve-O, the message to you is strong upward momentum move for that weekly time frame, for that intermediate time frame, and that would be a beautiful thing. Now, I'm going to go on a limb here and say likely that is really what we're looking at. Why is that, Steve-O? The reason is because on a daily time frame, we formed a TD9 count top on Thursday. It was negated on Friday. We're trading above Friday's high as we speak right now. There's not anything in these charts that's suggesting that BE wants to move to the downside out there. In fact, just the opposite. So if you're inside of BE, Duncan, I say stay inside of BE. You also wanted to take a look at, you wanted to take a look at this symbol here, QUBT. So let's go ahead and pull that up on our screen for us. QUBT. Trading out right now at $20.20. It's got 20/20 vision. Of course, if we had looked at this chart, if I was with you on Friday, what we would have said is, hey, this completed a TD9 count topping pattern, and price should pull back towards its oscillator and change line. Well, it didn't get all the way down there, at least not just yet, it being about $17.99. The low so far for the day is $18.41. So the TD9 count top here has gotten traction, and I would expect that we would see at least 1 to 2 more days to the downside, with that daily oscillator and change line being the price target. Now, I would also say on an intermediate term basis that what price wants to do is trade higher. And the reason that we would conclude that, Duncan, is because this had a TD9 count and Rhodes momentum indicator top. The TD9 count forming on June 20th, the Rhodes momentum indicator top the week of July 11th. Prices trading above those highs, the key high out here being 21.88. Now, if we closed above it on Friday. I'm sorry, we're not trading above it now, but on Friday, we closed above that. So we've negated that top. Prices pulled back and has found support at its green oscillator and change line. We're trading above profile resistance. The weekly chart says it's now neutral. So you got a neutral signal on the weekly, you've got a topping signal on the daily, and the monthly is trading with inside its profile. Did find resistance at profile at 21.88. So that's going to be a key number to be watching as well. A close above that would be a bullish outcome. So I would have to say that more likely than not, QUBT's got 1 or 2 more days of retracement back towards that oscillator and change line. You'd love to see it hit that, target that, and reject it. And then I would say, okay, the weekly chart is telling us it's time to continue that move higher. And that was QUBT, and that was for Duncan Steve. Rich in Oregon writes in, and he wants to know, where is BTG headed to? So let's go take a look at Bachman Turner, not Overdrive. this is Oprah. That's a different one. Stevie must have screwed up somewhere. I know somebody asked for OPRA, so we're going to go ahead and do that. Let me put that in here. So we take a look at OPRA. I don't think I covered this already. So you got a daily TD9 count top, and what price has done is it pulled back. It closed below that green oscillator and change line on Friday, and what it did this morning was it tested and rejected profile support at 1864. If price can close back above that green oscillator and change line, then you would say the signal would be neutral. So you need to see a close above 1921. Doesn't have to be today, but that's what you're looking for, because then you'd have price above a green oscillator and change line, above profile resistance, which was tested and rejected, and that would say that we start to move higher. If you look at the weekly time frame chart, we just have a consolidation with inside its profile. The range there, and it's made the full range, 1590 all the way up to 1959. The monthly time frame also trading between profile support and resistance. Support is a buy zone, and on a monthly basis, that is between $12.23 and $14.35. Resistance being the top of that profile at 2070. So whoever asked for Oprah, there you go. I apologize for not writing that down on my page, but thank you so much for your request. Again, Rich wanted to take a look at BTG, so now we've got those charts. It's trading at 476, and Rich is asking, where is this headed? Well, Rich, on a daily time frame, what BTG did was on September 15th, it formed a Rhodes momentum indicator top. That led to basically a 2-day retracement. Price traded with inside its profile until Friday. And on Friday, price closed above profile resistance, which neutralized the signal. Well, today, it's negating that topping pattern, and a close above the high from September 15th, which is 460, we're at 476, negates that signal. The weekly has an A to B equals CD pattern to the upside. So let's go ahead and draw that in here. We'll start with the A point, which is down to the low from January 24th. We run all the way up into the June 13th level. I'm just simply going to move this over to the C point. That's the lowest low that forms after that B point out there. And now what we have is an A to B equals CD pattern with an initial price projection of 496. This week will mark bar number 8 of a TD9 count. Remember the TD9 count pattern? The tops can form in bars 8, 9, or the bar following bar number 9. Today's negation of that Rhodes momentum indicator top suggests to Stevie that this week is not the top. Maybe it's next week or the week after, and that is also being confirmed by the monthly time frame chart. Steve Rhodes with TFNN. I'll look at those intraday charts for equity futures for those of you that are day traders. See if there's any signals coming up for the overnight session. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, to the Tom O'Brien Show. This is Steve Rhodes filling in for Tommy O'Brien. Right now, we're taking a look at the ES Mini. For its multiple different time frames out there, we go down to a 10-minute chart, 15, 30, 60, 2-hour, 4-hour, and the 5-hour, along with the daily chart. Again, on the daily time frame, we negated a daily TD9 count top on Friday. That suggests a strong upward momentum move. I do not see a topping pattern that is formed on the 5-hour, the 4-hour, the 2-hour. The 30-minute time frame chart negated a TD9 count top. That suggested further move higher. We do have a couple Rhodes momentum indicator signals on the 10 and 15, but price is trading with inside profile level. 67.46 is a key level of support out there. It's the 60-minute time frame chart that Stevie is eyeing. You can see that this is going to go ahead and form bar number 7 as we come into 4 p.m. We will get bar number 8 at 5 p.m. out there. Now, I don't know if it's going to be a higher high out there, but we need to see a higher high on the 60-minute time frame chart. In fact, if you are a intraday trader out there, I would be keeping one eye at least on the 60-minute time frame charts. I'm going to put all 4 up on our screen here momentarily. Just need to get to it, and here we go. Now, in the upper right-hand corner, you're going to see the NQ for its 60-minute time frame. That is going to go ahead and complete a TD9 count top at 5 p.m. So at 4 p.m., it's going to confirm that TD9 count top coming into 4. We will complete that pattern at 5 p.m. Now, what you'll want to do is you're going to want to watch the high of the NQ for its 60-minute time frame. And the reason is because if we start closing above that high, that tells you no top. The NQ likely to drag the markets higher or start to move them lower. We're in bar number 7, as I mentioned on the ES. That says if we get a higher high between 4 and 5 p.m. as futures are trading out there, that will then trigger bar number 8 of a TD9 count. You can get that TD9 count top on bars 8 and 9 to the bar following 9. Learn that pattern, folks. Go ahead and sign up for Mastering Probability. You can do it for 29 days. It costs you nothing, but you'll get an education of a lifetime. Folks, great to be with you on September 22nd. Have a marvelous Monday. Tune in tomorrow, 11 a.m. sharp to the Trader's Edge. Take care and be safe out there.